Gold and silver hitting new records today, both pacing for the best year since 1979. Copper is also at new highs. It's having its best year since 2009. Will the commodity run-up continue in 2026? Well, joining us now, TD Securities Global Head of Commodity Strategy, Bart Melek. Bart, it's great to have you on, and I want to start right there because it's been such a torrid year, whether it's precious metals or industrial metals. Does it continue?
Well, great to be here. Certainly, we think that gold in the first half of 2026 will likely continue. We're looking at a quarterly high of $4,400, which implies a trading high about 46, 47 plus. We think that this trade based on lower Fed funds as we move into the 2026 continues to happen. Steepening of the yield curve and inflation, I think, will remain stubbornly above the 2% target. At the same time, central banks around the world are betting on this whole trade associated with reduced value of the U.S. dollar. We're seeing investors trying to remix their portfolios from this traditional 60-40 to now include as much as 25% exposure in commodities, which includes gold, silver, oil, copper, and some of the other major commodities.
Are you a believer in the debasement trade? I mean, I realize a lot of folks have made a lot of money on it this year, and it certainly makes sense to hedge your bets here. When I hear numbers like 25% in commodities in a portfolio, and I look at where the dollar is, and yes, it came off this year, but it's starting to come back. I just wonder what kind of legs this has.
Well, I think for now, it's still very much on top of mind. But realistically, the economy is slowing somewhat. Employment numbers are eroding. The implication here is we're probably going to see less inflationary pressure. And it's very likely that some of the most aggressive tariff actions taken against U.S. trading partners are going to be mitigated to some degree, particularly on some of the precious metals, other inputs like aluminum and copper. We think at these levels it's unsustainable. So inflation may very well start trending lower as well because of those factors. And the Fed is unlikely to be overly aggressive on the easing. Certainly this is what Mr. Powell is signaling to the market. But realistically, we will have somebody new in May 2026, and we will probably continue to have a White House that is, maybe not interfering legally, but will probably try to pressure the Fed to be as accommodative as it can. So the economy is likely going to try to be geared up hot. We're going to see the Fed tilting towards a maximum employment part of their mandate. So I think partially that trade remains, but to have 25% exposure in commodities out of the hundreds of trillions of dollars that are now sitting in equities and fixed income, that's probably not possible, and that would blow up the entire commodity market.